So I'm going to start with Bill Winters, and I'd like to kind of get your outlook for Asia overall in terms of economic and financial issues that you're most focused on these days and how you see things going in the region.
Well, Clay, I'm very happy to open up. I realize I'm amongst a group of experts here, not just on the floor, but in the audience. So I'll throw out some views, and only as the fodder for subsequent contradictions from others. Overarchingly, we're very positive on Asia, and but we have to break everything into short, medium, and long term. Long term, I think we all know, and probably the reason most of us are here is the tremendous underlying growth expectation and opportunity. That's something that we're investing in. We haven't reduced our pace of investment at all on the back of the current geopolitical tensions, which we're all very, very familiar with, and don't intend to. The combination of underlying trade flows and demographics we think are extremely exciting across the region. Medium term, see some very interesting opportunities as supply chains reconfigure. And we as a bank are certainly trying to prepare for that and facilitate that to the extent that we can. But I think that supports growth in the medium term. And the short term becomes much trickier. We know that we're in a global cyclical slowdown. And we know that that's compounded by geopolitical issues, which you talked about and will continue to talk about it in all of these panels. So I won't dwell on that. But we see real pressure in the short term. But we see the opportunities for our business and for other businesses to invest through the medium and long term, which we think will buffer the short-term tensions.
Okay. Thank you very much. And Sugo, let me turn to you now. So Bill kind of gave a quick picture. Can you talk a little bit about your thoughts on Japan and if you have any other thoughts on Asia as well?
Sure. Well, about Japan, it is located far east of Asia, and compared to the other Asian countries, it's matured our economy. But that said, I still remain cautiously optimistic about the outlook of Japan's economy. It would maintain the modest but stable economic growth, underpinned by the firm domestic demands. Private consumptions, in particular, remain solid. Although recently there was a consumption tax rate increase by 2%, the negative impact would be limited because, number one, government introduced various fiscal policy measures to neutralize the negative impact of it. And number two, our labor market is very tight. Employment conditions are quite strong. And on the other hand, foreign demand is kind of a risk factor. U.S.-China trade frictions is also obviously cause of concern for everyone. And if that get into the wrong directions, that would cause the larger than expected deceleration of a global trade and economy. That would have negatively affect Japan's economy as well. But overall, net and net, I still very optimistic about the outlook of Japanese economy. And if I may, a little bit discuss about how we view the Japan as a whole market. Japanese economy is sometimes referred to as the lost decade. And I'm sure that some of you may view the Japanese environment have negative views on the Japanese business environment, given the aging population, low economic growth prospect, and the prolonged low interest rates environment. But I, again, remain very confident Japan is an attractive market because there is a source of strength. Number one, political stability. Political stability these days has become a kind of a rare breed. The fact that we have the stable government is giving us a great comfort and provide the predictability that allows effective and stable management. But that said, we cannot underestimate the mid to long-term negative factors and challenges such as aging population and declining workforce. So in order for Japan to sustain growth, it is essential that, number one, we embed the growth outside Japan by deploying capital abroad, as the listed company in Japan, for example, accumulated internal reserves more than $4 trillion, enough to deploy such capital abroad. Number two, having a quality workforce, we have to improve the productivity of the laborers. Japan is ranked 20th among OECD countries in terms of labor productivity. Half of that of Ireland, 2/3 of the United States and other European countries. So it means we could be a great beneficiary from the making investment in the technology to enhance the productivity. So we have many challenges in Japan, but I would say challenges also bring an opportunity.
Thank you very much. Xiaopeng, thank you very much for being here. We just saw numbers coming out of China this morning on economic growth. It appears that there's a decline in the China economy. The central bank has warned about downward pressure on the economy. How does your institution see it, and how do you think the China economy is reacting?
Thank you, Clay. I think the question is bigger. I need more time, but don't worry. I just spend the short time to explain how about the China's economy in 4 points. Firstly, about general situation. As we all know, today China's economy is facing downward pressure due to trade conflict. But in my opinion, I think China's economy is very resilient, especially the rapid growth of service industry and technology innovation can support the economy. So I think China's economy is wealthy today. Second, about the regulation and the policies. As we all know, recent years, the Chinese government made many policies to promote the economy. But in my opinion, I think the Chinese policy is so cautious. For example, when Chinese government make the policy clear that we are not to flout the economy with the liquidity, and we will not use the real estate as a short-term economic driver. And meanwhile, last year the Chinese regulator issued new rules on the shadow banking to prevent the risks with shadow banking business. And thirdly, about new kinetic energy. The meaning is that future growth of China's economy, I think, depends on the economic reform and technology innovation. As we all know today, the many kinds of innovations, such as AI, fintech, have changed the people's lifestyle. It creates more and more opportunity of development. So in the new future, in my opinion, I think the sharing economy, digital economy and the platform economy will boost the growth in China. Firstly, about confidence. If you ask me, how about the economy in China in the near future? I think it needs time to realize the economic transformation. But we are confident for the future's growth. So, give you a good example for our company. Everybody know our company, China Everbright group is a financial holding group in China with 4 licenses, with 4 financial licenses. We are striving for the opportunity of business. Number 1, we established a AMC to buy NPL, non-performing loan, and do business of debt to equity swap. And the purpose is manage the deleveraging. And number 2, we open a wealth management subsidiary in China to fence off the risks from the shadow banking and from the formal bank. And number 3, we innovated a new technology platform, which is, cloud fee payment system to provide a special business model for fee business. It's very good for adjustment of income structure. And number 3, our investment banking business to do IPO on Sci Tech Innovation Board in Hong Kong, and also to do business with QFII and Stock Connect.
Yeah.
Finally, as we all know, recently we are continuously accelerating process of opening up to the world. Work together with our financial partners such as Sun Life Canada, Prudential US, and Abu Dhabi. Okay, generally speaking, in the near future, both the Chinese government and the Chinese financial institutions warmly welcome more and more foreign investors to come to China, work together hand in hand to create some good opportunities. Thank you.
Thank you. Vishaka, so Sugo talked about Eastern Asia. You're from Southern Asia. And Prime Minister Modi just got a second term in office. But you see, the economy, which has been growing so well in India, has seemed to slow a little bit. How does your institution look at what's happening in India and elsewhere?
Yeah. So if you look at, in India and the first term of Mr. Modi as a Prime Minister, I think they have taken certain steps and the reforms in their first 5 years. My sense is that when he's come back now with even bigger majority, it's going to be a growth phase. And one has to understand what are these reforms that have happened in India and what kind of impact it will have going forward. I will look at these reforms in mainly 3 categories. One is, of course, the economic reform, the second is the social reform, and the third is the governance reform. In terms of economic reform, we have now a law which talks about, the resolution and insolvency and so on and so forth, which we did not have in India. I think what it will bring is a lot of discipline. Of course, that is, at the moment, the recovery under this law is slower, but I look at it more as a teething problem, and it will get settled. But what importantly has happened is that this law has become a big deterrent for the corporates to actually default. And if you look at around the world, the sponsors who actually default to the financial sectors can actually go under the liquidation and buy the asset back. In India, that's not permitted. I think that's going to be a big deterrent as one goes forward. The second big reform which Modi government did, and I think the implementation did face some teething problem, but it is getting stabilized, is the GST. Now we have a tax regime which is across the country. Again, India is a big country with different states and so on and so forth. So again, the movement of the goods and services will become much better. And there will be a lot of savings which will happen in terms of logistics and the other things. I see that as a big reform which happened. The The third big reform, which Modi government has done is that India is a large country and we do have disparity of the income. So in the last decade, one has seen the growth mainly in the urban areas. I think this is the first time that one has put a pedal on the inclusive growth. So, there are large number of accounts which are being opened, and these numbers are really, really large. These are like 322 million accounts have been already opened by the banking system. And of course, with that coupled with the mobility, that we see in India in terms of telephony, where, the per GB cost of consumption in India is less than $1, I think it will be a great preposition as we go forward. So these are the few economic reforms which happened. The second thing which happened is we now have a platform called Aadhaar. In India, we didn't have a social security number for the individual. That made it very difficult to identify the people and really work with them in various of the other things. So today, we have this Aadhaar, which is a biometric identification for the individuals. It covers almost 99% of the adult population, which is going to be a big thing as we go forward. So these are the reforms on the economic side. On the social side, of course, one has heard about, and everybody has heard about the Swachh Bharat, which is a big, big step from the government. And the last is the governance. I think there are a lot of laws which have been passed, which will bring the transparency and in the dealings of the corporates and the others in the Indian system. And I think that is something, when one talks about to the large institutional investors, that is something that the investors actually look for when they invest into the country. By doing this, I think somewhere the pace of the growth, I would say, has got moderated. And the economy, which was growing at around 7.5% plus, today is growing at a shade below 6%. I look at that as a consolidation phase. And really, going forward, one believes that there are all building blocks in place. What it requires is, now the momentum in terms of actual investment. And in the second term also, they've come back and they've taken further reforms in terms of reduction in the corporate taxes. Today, the corporate tax in India for the new manufacturing company is 17%, which is very, very competitive when you compare it with many other countries in the world. Government is today capitalizing the public sector banks and also merging them to really create the large institution to fuel and finance the growth which they expect to come in the future. So to be frank, I'm extremely optimistic about the growth in India.
It's good to have optimism in this world. So Yugang, so you represent ICBC here in the United States. And you're obviously a very large global bank. Maybe not as optimistic as the U.S.-China relationship has had some issues lately. How is it affecting your institution? I'd be interested in your view on the China economy as well, but also just kind of how is the U.S.-China tension affecting an institution like ICBC, which obviously is with such a global presence?
Yeah, thank you for the question, Clay. Well, this is basically we'll discuss the topic in the market. Well, you can see basically the response from the capital market, how it's acting like so. But for ICBC or a business in the United States, it's more localized business. So it's a little bit indirectly impacted by the intention is because of the real economics were seriously impacted by the kind of the back and forth of the discussion. We worked together with a lot group of the Fortune 500s over here that we're seeing many of them is a little bit suffering from the uncertainty. I think that you mentioned uncertainty is definitely the largest exposure that when you're looking at the future market, that how you can price in as a financier into the financial solutions. So it's very hard to work without that kind of a certain expectation. But I think personally, I'm really bull at the FANO in the future. I think I'm positive definitely to to the conversation or to reach a deal, because the two countries is really like a great partner in past 30, 40 years. And from the scratch of the business to right now like 600 billion, and the largest generator to the world economic since 90s. So I believe somehow, somewhere, the market will find the solution. The market will definitely drive to somewhere that the other business parties believe it should be over there. So back to your question, finally, I think our current business, since we're more involved in the U.S. operation over here, so we feel comfortable right now, but uncertainty in the future definitely move it forward. But I'm personally quite positive to the discussion. And as global banks, I think all global banks were impacted because of those uncertainty. And we were all eager to find a kind of the solution or looking how that we can press in the uncertainty into the future. And the discussion between United States and China is not only impact the business in two countries, it's actually part of the large scale of the business in the world, especially the current supply chain changes. The reshape of the economic will definitely be very costful to some extent in the future. Thank you.
And let me pick up. Sugo, you had mentioned in your opening remarks, you talked a little bit about the concerns from the U.S.-China relationship and the fallout that could potentially. Maybe you could talk about that in the context of your overall strategy for the region, for your financial institution, and how much of that strategy, if any, is being affected by this trade tension, which kind of goes in fits and starts. But I'd be very interested in hearing how you're thinking about Asia.
Sure.
In broader.
Okay. Well, our strategy in Asia, in a nutshell, is to capture Asian growth and to contribute to Asia's growth. To materialize that strategy, we made acquisitions of local operations with a partnership and made a strategic alliance. And in that way, we have acquired our newer local franchise and integrated that local franchise with our global franchise. As an example, we acquired the Krungsri Bank of Ayutthaya in Thailand in 2013. They are the fifth largest bank in Thailand and have a large scale of customer coverage, mainly for retail and SMEs. So in the auto sector, for example, adding Krungsri's client coverage of local suppliers, dealers, users and employees who are belonging to all the same ecosystem, we added that coverage to our existing footprint. That is, for example, we have a strong relationship with Japanese automakers. So by combining the two franchise, we are able to provide the value chain finance from end to end. Mm-hmm. So that ended up with, for example, a much higher growth rate of net income compared to major four banks in Thailand. We acquired recently a bank in Indonesia. We are planning to roll out this business model strategy to Indonesia as well. I believe the key to success of a partnership in the region is, number one, to respect your partner by maintaining the autonomy and the brand of our local operations. Number two, to be humble. I said we want to roll out the success model of Thailand to Indonesia, but Indonesia is not Thailand. You need to be humble to listen to Indonesian partner and their practices and try to learn from them in order to be successful in Indonesia as well. your question then to how U.S., China, or these, are frictions could affect the business in those areas in Asia. Well, not in the China, maybe in ASEAN countries. They would be benefited in the short term from such frictions, as there would be a lot of a shift from operations from China to those regions, and the trade could be going through those regions from China via those regions to the United States or the rest of the world. So in the short term, in the short run, there will be a certain benefit from those ASEAN countries. But it's a short-lived benefit, I believe. If the frictions prolonged and ultimately overall trade volumes declined, that those countries cannot be escaped from being suffered. So that may possibly undermine the potential growth of the region as well. So therefore, at the end of the day, it's a common risk factor.
Yeah.
Nobody can be escaped if that's getting worse and worse.
So, all right, Bill, your institution is throughout the region. So Sugo just was kind of explaining how he sees some of the negativity and the fallout from the U.S.-China trade tensions. How is it affecting your institution? How do you see it? I mean, is it having, I mean, sometimes in Washington, we're not exactly sure. We're so focused on what President Trump's doing that sometimes we forget what's actually happening out there, so to speak. So,
Well, the trade tensions are clearly weighing on, I'd say, the global economy. They're weighing on the Chinese economy, which therefore means they're weighing on the various pieces of the supply and value chain around Asia. So we feel that's inevitable in this circumstance. It's not overwhelming. I think China has, thankfully, taken a prudent but quite assertive approach to maintaining a level of growth through redirection of resources to other segments of the economy. So we're not seeing anything that's unwieldy, but we're feeling the pressure. As I mentioned earlier, we're also seeing the quite active reconfiguration of supply chains. And that was happening in any case. China is becoming a less low-cost or a higher-cost manufacturer. So the idea that China was going to rotate lower value-added manufacturing out of China into other parts of the world, or that Western companies would do the same, or other companies in the region, foreign companies, that was happening in any case. It will accelerate with these tensions. There's a question around security of supply, in particular for some higher value-added goods, which I think is probably permanent. I think we have to recognize that the willingness of a Chinese company to rely on U.S. technology or U.S. supply, or for an American or European company to rely exclusively on a Chinese product, it's probably permanently impaired. So this supply chain reconfiguration is not hedging, it's not temporary. There's an element of permanence to that, and that's impactful. There will be winners and losers in that process, and obviously, as a bank, our job is to try to help the losers through that process and live to fight another day, and to help the winners to grow their business. But that's sort of what we do all the time. So I don't see this as fundamentally different, just a new set of dynamics. For us overall, I can say, as we sit here today, our business has not been materially affected. We've been growing at a decent rate, and that continues. But within our portfolio, there are pockets that are suffering. The ongoing challenges in Hong Kong are creating some pressure on the economic and business environment there, for sure. The massive investment into Vietnam is going the other way. So I think, as always, certainly as long as I've been in banking, we've had a task of pretty much real-time and continuously reallocating resources based on where our clients have needs, and where we can best manage the associated risks. And I see now is not materially different than any other time that I've been around banking, even if what you see in the news is a little bit more stark from time to time.
Stark is a good word. I should remind everybody, if you have questions, please submit them, and they will pop up here. But In the meantime, I'm going to switch a little bit. I did hear a little bit from the last panel that they talked about this issue, so I thought I would do it with this panel as well, which is, so Xiaopeng, your institution has been elected to the Dow Jones Sustainability Index for 4 years for outstanding performance. So congratulations. And China has clearly made it a real effort on growing green, to have its growth be more green and more sustainable. How is your institution looking at these this sustainable finance, green finance type of issues going forward? How do you do it now, and how are you thinking about it going forward?
Thank you. That's a good question. In my opinion, I think making China's economy greener is very important and necessary. As one of Fortune 500 companies, we understand the bigger we are, the greater responsibility we have. And how our company devotes so many resources on the industry of environmental industry. So because we find obvious opportunity of development. And in the one hand, there are lots of potential financial market. Give you two figures. One is about 33%. The meaning is that last year, the green funds business issued increasing about 33% year on year, making number 2 in the world. Another figure is about 2.5 trillion RMB. The meaning is that this year, I think the total scale of green financial trading will reach 2.5 trillion RMB. It's so huge. So, on the other hand, we find strong policy support in this industry. So, as you know, recent years, Chinese government approved many cities to build green financial pilot zone to create some new business and so on. So about our company, everybody know we are a financial good holding company, but we have also another good industries, such as environmental production industry, health industry, and tourism industry, and so on. For environmental industry, green industry, we accumulated many, expertise. For example, we have a good company in Hong Kong, which is Everbright International. It is a biggest investor and cooperator in waste-to-energy business in Asia. And especially the company has won the great title of Asia most honored company. It's good things. On the other hand, you may know, so our company develops so many scale of the green financial business. So first, we are going to set up a new green investment funds around Build on the Road initiative. And the second, we set up a green technology research center in Hong Kong. And thirdly, our commercial bank, Everbright Bank in Hong Kong, is the first commercial bank issued green bonds, overseas green bonds, and promoted the green syndicated loans business in Hong Kong. And fourthly, we established a good relationship with Luxembourg Exchange to create a new, how to say, green financial products. Finally, I will work together with foreign investors who may come from member of IF, hand in hand to build a better life for people in the world. Thank you.
No, thank you. And so, Bill, I've read a couple of your speeches. You've been pretty outspoken, I think, on sustainable finance issues. And you're obviously an institution with a big footprint in Europe and a big footprint in Asia. We hear about it from Europe all the time. I think we just heard that it is being thought about a lot in Asia. How do you see it from your kind of, if you put your Asian hat on, is the kind of the sustainable finance issues capturing as much attention as sometimes we hear coming out of Europe, and we don't hear it as much here in the United States. But how do you see it from the Asian perspective?
I think it's accelerated tremendously in the last few years. So I think Asia broadly, obviously Asia is a big place, lots of different pieces, but Asia broadly was a bit behind Europe, for sure. But I would say leading up to and then following Paris, there's been a tremendous focus on sustainability for some for the good big picture reasons, which is saving the planet, but also for some much more local issues like having survivable air that isn't permanently damaging our children and creating an inhospitable place for foreign investment. So I think in many ways it's been led by China. I think the transformation of the focus on sustainability in China, and when we just heard about it in some detail, it's spectacular. Obviously, there's a long way to go. If you look at the top 20 most polluted cities in the world, China still features prominently in that list, but with dramatic improvements and a real focus. And I think some of the infrastructure to support sustainability is very much coming out of the Asian region. We've worked very closely with the authorities in Singapore, Temasek and others, around sustainable financing structures. Obviously not just for Singapore. Singapore is quite anchored in sustainability already, but for the rest of the region and beyond. So finding ways to securitize sustainable financing underlying assets, which is, I think, a necessary precondition to developing large-scale funding for sustainable projects. We've worked very closely with, obviously, with the financial institutions, state-backed and otherwise, in China, in Singapore. Hong Kong, I think, has become certainly a regional center and to some extent a global center for sustainable finance. Dubai has made, as another financial center, has made tremendous efforts, obviously looking south to Africa, but also east. So yeah, long story short, I hope, I think there's been a tremendous awakening in Asia, and there's some really good fundamental work that's being done and infrastructure that's being laid. It's not just lip service.
Very good. Vishaka, we've heard a few of you mention the issue about financial technology, and they're clearly providing new opportunities for financial institutions throughout the region. How do you? This is an interesting point of view, and how do you think about it? Because going forward, because obviously financial technologies companies can be competitors, but they're also showing lots of opportunities.
Yes.
How is your institution looking at it?
Yeah. So, the technology in the context of India actually has changed and probably will bring a lot of opportunities as we go forward, because we are a large country which is spread, across. We have diversity which is across in terms of language and so on and so forth. There are three things which have happened, and I'll talk about our strategy in that. One, of course, what I talked about, Aadhaar, which is the unique identification number, which makes the KYC in the financial world much more easier, which was not possible before. The second important thing which has happened in the Indian context is the entire telephony. Today in India, we have around 1.2 mobile connections. We have 450 million internet connections. That makes the cost of delivering many of these products much more cheaper. And I think when one talk about, again, the large country which is a developing country, the size of the transactions are really, really small. And therefore, the cost of delivering this solution becomes extremely critical. So I think that's an important thing which, again, has happened in the Indian context. Third important thing which has happened is also that we have a large platform which is called UPI. And this is 24/7, 365 days platform. It makes the transfer from one bank account to the other instantaneous. And the cost of that, again, is very, very low. I think that, again, has completely changed the way technology will be looked at and used, not only in the financial sector, but probably in the various other businesses. From ICICI's perspective, of course, we have always led the tech in India. We have a lot of first at our thing. We were the first one to introduce internet banking in India. We were the first one to introduce mobile banking in India, and so on and so forth. So we leverage what the changes that have happened to deliver the product to our customer in two ways, of course, to enhance their experience of dealing with us, but also the second is to bring down the cost. And of course, this is done across our, the customer base, whether it is individual, small and medium enterprises, or even the large corporates. So we really look at this as a big, big opportunity as we go forward.
And Yugong, I mean, in some respects, you hear about like what Vishaka was just talking about. It's really had an impact in China, maybe more than almost any other country. And so, how's ICBC kind of adjusting to the fintech revolution, if that's real, or maybe it's evolution, but whatever. And how do you see the same issues that Vishaka was just talking about?
Thank you. We welcome it, and we feel very excited about it. Well, the potential, like I mentioned, in Asia, it's the fintech, big tech is a very big part of the potential in whole Asia areas. Generally speaking, if you look at what China and India happening right now, if you see so-called unicorns in the world right now, in top 20s, 10 is from United States, the other 10 is from China and India. So the business opportunities were generated by the big tech in China, especially in some eastern part of the area. It's really provide great potentials. And for ICBC, we are welcoming it, and we have built a lot of platforms and regarding to the big data implementation, including the cloud lab or cloud technology, the blockchain, big data, biology, AI or AI. I remember in last year that we were awarded as the best AI bank implementation by the Asia Banker magazine. So this is a great opportunity, I think, in several areas. The first is, you mentioned, Chairman Lee mentioned that the inclusive finance. In China, right now, ICBC had about 600 individual accounts, but there's still over 300 individuals who do not have the usage or the capability to reach out the bank services. Mm-hmm. And definitely the new technology will help out with that side with lower barrier. And the second side is the reaching out the clients, the behavior pattern of the bank will definitely change. We see the challenges in that side. We see more great opportunity in that side as well. That how the bank can reach out our clients or serve our clients to meet their comprehensive requirements with new technology without really like the bricks or kind of the physical locations located everywhere. That would be also part of the green finance as well. So you see the definite challenges as well. You probably will see the your competitor being changed, not from those banks, maybe from cross-border, any industry may became really a banking carrier. But we, ICBC or generally, we are committed to be innovative. We committed to invest in the technology. In the first half of the year, we invested about $5 billion for new money into and the RMB into new money to the fintech. And I have to see that from my personal experience, it's a tremendous change that happened in China. Like 30 years ago, you have basically 0 point of online transaction settled. And what we have in the first half of the year is 98% of transactions is throughout online mobile user rather than traditional the bank unit or bank networks. And I feel compelled also to see that a lot of contribution actually from Chairman Li. That time he was the leader in SBC, leading the new technology and the online banking business as well. So my impression in China for the new technology, I would see it will be the new generator to the new economic in the future.
Very no, and so yesterday I was interviewing some of the regulators, including the folks from the Financial Stability Board, and it is in this area that there is definitely concern because I think in some respects they're not exactly sure what to do, and so they're trying to figure out what's the best way to be a supervisor or regulator on financial technology issues. But one of the areas they also talked about that is still not solved, and it's been a problem, is on what is market fragmentation. And so Shugo, I'm going to turn to you because actually, one of the leading voices to be worried about trying to figure out have all the regulations created these fragmentation problems has been your government, actually the Japanese government, and I'm sure that it affects your institution very much. So if you might be able to talk a little bit about market fragmentation, how to think about it from a private sector perspective. Obviously, we heard from the regulators yesterday. So.
Okay, thank you. Well, that is a challenge for every financial institutions who are doing the business globally. Because in order for them to pursue the optimum efficiency for global operations, fragmentation in one way or another would undermine that efficiency possibly. So the key challenge in this fragmentation debate is how to strike the right balance between local resilience and the global resilience, especially when there is trade-offs or conflict. And also, I fully appreciate every regulator is responsible for safety and soundness, the resilience in a respective jurisdiction. But I suppose that a local resilience does not necessarily add up to our collective resilience. So it is essential that balancing act is essential to secure the global financial stability. So, the fragmentations needed to be addressed, collectively by the regulators, and it is important to hold someone or some global group or regulatory group to be accountable for how to manage and to hit the right balance between the local and the global resilience. It's a hard job.
Yeah, no.
Hard job, and nobody may want to take up that job. But the fragmentation is really the challenge if we want to secure the global stability and the resilience collectively.
Right. So the one who is supposed to take up that challenge is largely the Financial Stability Board, to try to, as you said, work at the global level, but also kind of bring it back down to the national and local level. And they, in some respects, are acknowledging there's an issue and a problem, but at the same time, progress seems slow. So, Bill, I'll turn to you and to see whether or not you have some views on whether or not you think you see a possibility for greater progress going forward, or are you a little worried that we're going to kind of stay in this stalled state and fragmentation will increase?
I think we have to look at this in the round, and when you look at it in the round, it's worse than looking at it narrowly, because all of the global institutions that we've come to rely on I'll even say in the post-war period, are being challenged right now. From trade to financial regulation to technical standards, there's a challenge to the global systems. Here we are sitting in meetings around the IMF, and the good news is it's functioning. It continues to function, and so the world is participating, but the challenges are very obvious. I think that the challenge that we've got, where the FSB was created to help bridge some of the gaps, and I think the BIS has been in existence for quite a while. The institutions are there, but they're under attack. And not just from the obvious sort of possibly short-term targeted attacks, but more structurally. We're also beginning to see the consequences of that, not dramatically, but we can feel the impact on economic growth. We can feel the degree to which this is hitting citizens' pockets, this cost of fragmentation or the cost of disintegration of global institutions. So I'm hopeful that as the cost becomes a little bit more clear, that it'll start with a leader, and then other leaders will have to come in, will begin to recommit to the global system. But right now, the trend is going the other way. So in the short term, I'm not optimistic. I certainly, from the perspective of running a bank that is probably experiencing as much fragmentation as anybody, just given the nature of our footprint, it's a tremendous challenge, and we're assuming that we're going to have to live with this for a long time. But I don't think that should prevent us from continuing to focus on ways that we can reinforce the global institutions that have served us pretty well over the past 60 or 70 years. But we'll see.
Right, because, well, one point is whether or not is it harming profitability, or is it actually having an effect on the financial system overall, I guess. And
yeah, I think in an environment where liquidity is hyper available, the cost of fragmentation won't be felt by the man on the street to anywhere near the extent that cost of fragmentation will be felt when there isn't excess liquidity. We're only one currency run away from a period where there is no excess liquidity. And I don't mean because the central banks won't inject it. I mean because it's not going to get to the man on the street. It's going to get clogged up in a fragmented banking system. So we haven't had a real challenge, close to one in Europe. We haven't had a real challenge since 2008-9. We can all imagine in our professional lifetimes, there's going to be another challenge. Probably nothing like that one, probably not as severe. But the weakened infrastructure for global cooperation and the weakened infrastructure for transmission of liquidity will be very painful at that moment. That's my forecast for the day. And it's not too late to do something about that.
Vishak, I have a question for you that comes from the audience. So I had asked earlier about sustainable finance and how is that work? How is that looked at within India? And is it becoming part of your bank strategy to think through that? And are the regulators kind of talking to you about these issues and whether or not it's systemic or is it an issue for your institution?
So in India, we have something called priority sector, and which is something which is prescribed by the regulator. The priority for the country, of course, changes from time to time. So at the moment, the priority includes the sectors which are underbanked in terms of industry. It could be in terms of customer segment, and so on and so forth. So it includes people with certain cutoff of income and below is considered as priority. And at the moment, of course, something like renewable is also what they're thinking about as what we were thinking about as a green, thing is becoming a part of that. And this has to be around 40% of the total advances of the banking system. So naturally, all banks have to adhere to those standards. And if you do not, then it has very large penalties to it. To be frank, up to now, this was considered as, most of the time, this portfolio was not really profitable. And people were doing it more in terms of, adhering to the regulatory standards. But with the changes that I spoke about and really the wealth which is created in India, many of these segments, if done properly, I think are becoming quite profitable, because, as I said, that most of the transactions in these segments are really very, very small. And therefore, with the use of delivery channels that I spoke about in terms of technology, it brings down the cost of servicing these customers. The second thing which is happening is the entire wave on the fintech in India. Again, large bank like ours, we are partnering with many of these fintechs to actually deliver those solutions, which we believe they are in a much better position to deliver rather than a bank like us who's very big. So those kind of partnerships are also getting forged to deliver the, the sustainable agenda in India at the moment.
Well, thank you very much. And I want to thank all of you very much for doing this. And you've provided us, I think, in a short period of time, a lot of issues. And thank you again for coming. And I hope you enjoy the rest of your week.
Thank you.